YouTube? Welcome to another video. And today I'm doing a trade recap on my 3 trades from today, which made me a total of $2,064.40 this morning on my Top Step Express account. I'm laughing because this is my 3rd time recording this video. The first time I recorded, I just didn't like it. Second time, audio wasn't working. I realized my audio was off. So now, this is the 3rd time. We're going to hope that the audio is working. And so yeah, we're going to get right into it. So I went 2 for 3 today. I took 1 scalp, 1 loss, a small loss, and then 1 decently sized win that definitely could have been better, but I'm going to talk about all that. So my first trade came off of 15 seconds. It was a very small scalp pre-market that was honestly an A+ setup. I didn't mind taking it. Ended up coming out, sweeping these external buy side, put in SMT, had resting sell side beneath this, got a CISD after tapping the 15-second enter short, stop at the high, took all off at this low. First trade done. Second trade, well, let me explain my bias today. So going into the day, I did want to see, I have my drawings, so I did, okay. Going into the day, I wanted to see these highs get taken, and then along with all of these equal highs here, because we had an SMT at London low from open. This right here was an SMT, I'll show you all. You see here, ES swept the low, and Q did not. I wanted that SMT to be the fuel to push us to take all this resting buy side. There's also a daily fair value gap up there as well. So that's my bias going into the morning. However, we do have an SMT at these highs. So there's an SMT at the highs and the lows, but we did look very bullish because we did run all these imbalances. We got a 1-hour CISD. I'm expecting higher. So with that being said, I zoom in at market open. Where's market open at? Okay, market open. We were very choppy. We did close above the 5-minute in a way. We really didn't. Close above the 3-minute. That's what I was basing on. We closed above the 3-minute. Had the resting buy side above us. Let me delete this right quick. Close above the 3-minute. Had the resting buy side above us. I zoom in. Wait for open. We come down. Sweep all these lows. Tap the 5-minute and the 1-minute imbalance. So this is where I zoom into the 15-second. Wait for my model, which it presents itself right here at 9:32. CISD V-shaped recovery, unicorn, enter like right here. It's like my fill. Stop was initially beneath this candle's wick. Wanted to see that. We also had an SMT at this imbalance as well. ES had never tapped it. ES had never tapped the imbalance, which is right here. So I was fine with the trade, despite the SMT at the highs on the higher time frame. Once I seen this get this 1-minute close below, that's when I ended up tightening my stop up to this candle's low right here. I didn't really want to see us come back. I would like it to just have been a quick tap of the order block and recovery. And I figured that if we did continue, I was going to get stopped out, which was a good decision because I would have ended up getting stopped out regardless. And so yeah, let me not delete that. And so yeah, that was my second trade for a very small loss. I was up about $200 on a day after both of these. And where I think I could have been better was just my reaction time and how quick I was to adapt to what the market was giving me. So right here you can see, let's delete this right quick. We had a SMT and an IFVG. Well, this is the 15-second. Still, we had an SMT at this high, and we had an inversion for value gap. Also ended up inversing the 1-minute, inverse this imbalance, and we inversed. We had 3 inversion for value gaps. So at this point, I still was kind of ignoring the SMT because I did want to see longs. I was looking for longs once NQ tapped this 1 minute because ES was just tapping the 5 minute. However, my initial plan wasn't the same because I was planning on making a decent amount of money off this trade. But once I saw the SMT getting weaker, ES tapping the 5 minute, usually if an SMT breaks that's not in favor, or that's in favor of your draw, that declines your probability greatly. So I was looking for longs still, but with very low risk, back up to that high. But once I seen this close below this 1 minute, that's when I really zoomed out, reevaluated, which I could have definitely done better at. I should have noticed this prior. But we had NVIDIA earnings data week. We had previous day low, then we had previous week low resting as well. This holds though, probably, honestly. Next sell side up. We have this, we swept that, we have this. That's a far draw, but I would like to see if that holds off this 5 minute. But yeah. I noticed NVIDIA data with the previous day low resting beneath this. I was like, alright, we're probably gonna go there. Almost guaranteed that we're going to go there, actually. So from there, by the time I really recognized that price is like right here, and something that I did do well was not just FOMOing into this trade and taking a horrible risk to reward just because I was greedy to make money and I wanted to make more money. I was patient. I let these first two trades go past me because they weren't really my model, and they also, my risk to reward wasn't the best. I usually like to average at least a 2, preferably a 3 to a 4 R. And if I was to enter where I thought about entering, I would have been here. Stop would have had to been probably at like this high, like right up here. I would expect that to be a breakaway, leaving me with still a decent risk to reward, but not really what I liked. We were just too low for me, and we were also very low to the next form of sell side, which was right here. We definitely could have just swept this and reversed. I didn't have full confirmation that we were going to sell off all the way to NVIDIA earnings until all these bodies were closed. So from there, I noticed the 5 minute opening up in the 3 minute. So I just waited to see a tap of either or, which ES ended up coming up and tapping, NQ did not, leaving us with an SMT fair value gap. This is just when one indice taps the imbalance, the other one doesn't. So putting the SMT fair value gap here, and I honestly wasn't even planning on catching this move. I was just going to watch it go by because I figured my model wouldn't present itself, but it ended up doing that. It's got the SMT, CISD, tapped the PD array, took the short, very great risk to reward. I took it with low risk, which I kind of do wish I put on a little bit more just because of the conviction behind it, and I'm already been having a pretty good week, so definitely could have used a little bit more leverage just to try to squeeze out some more, but it's alright. SMT, CISD, answered, and then once we got this respect of this imbalance here, I moved my stop to this high. It was really, I waited at first. At first I went break even, and then once we got this second tap in respect, I moved it to right here. So my stop was trailed, risk-free trade, held the data lows, took off 80%, took off the rest at previous day low, which I'm not mad at it at all. Should have definitely zoomed out though and understood that we were very close to previous day low, or previous week low. I didn't really understand it at first, but that was essentially my trade. My trades from today, my conviction behind all of them, ended up making me $2,000 eligible for a payout tomorrow if I get another day of over $200. I haven't had a red day since last Tuesday. Been on a very good streak. I'm very happy with the way I've been performing, and I've also been studying my metrics a lot more. And this is something I want to talk about. Just studying yourself and reflecting on your data and your decisions, because they'll definitely tell you a lot of things that you might not realize. And something that I've learned about myself more so recently, after reflecting on my data and looking back at my trades earlier, is that a majority, I think like 90% of my losses come from the first 10 minutes into open. And so with that, I started to tell myself, all right, if you are going to take a trade pre-940, first you have to lower your risk, and it has to be an A+ setup, which is what I did today. My risk on this trade ended up losing like $170, which is not bad at all. My initial risk was like 300 or 400 on a 150K account. That's nothing. And so just making those slight changes like that, because you can make all the money in the world, but if you're giving it back, you're not keeping it, then it's pointless. So that's something that I've learned, and it's just managing my losses when it comes to that. Because outside of that, if I take a trade after 940, my rate of return is much higher. I'm making a lot more money. I'm not losing as much. So as you can see, this is a prime example. However, I do also catch some good moves off the open when they present themselves. But just off of knowing that alone, I'm going to start de-risking if I do take a trade off open, because it's not really worth me trying to make a bunch of money, especially because of how volatile the open is. It's prone to having fake outs and very strong moves. So that's something I learned. Another thing is just understanding your risk to reward and what settings that your model works the best in. Your models, if you take multiple different models. Now, I take more discretionary trades. I don't have like one set specific model. I just have different confluence that I like to follow. And if they present themselves, they present themselves. If they align with what I want to see on the higher time frame, then I'll take them. And with that, like me, say last year, I would have still tried to enter this trade all the way down here with a terrible risk to reward, getting FOMO, getting greedy, just trying to make money. And something that I'm proud of is that I started to tell myself that once we sweep a low, an internal low that matches the external draw, don't take the trade. Just wait for a better setup to come or a new opportunity. Because say I would have just taken this right here, we were already about to sweep the low. We could have easily swept this low, reverse back to the other side. Now anything could happen. The market's not always guaranteed, so I didn't take the trade. That clicked in my head, don't touch it, just because of that. Which I think in the long run, like, yeah, today it would have worked, but in the long run, that's going to save me, and if you take that advice, it will save you a lot of money as well. Because you never know what the market is truly going to do, and this trade is not in, it's not in discount of the range. Measuring out standard deviation is very important, because if you're not taking discounted trades, then your risk to reward will always lack, and you will get stopped out a lot more. It can be a very good setup, but you could get stopped out just due to standard deviation levels. Another thing as well, once we take sell side, just let price give more data, let more candles form, let price really show itself, because a lot of the time, as you can see, we'll just chop. Once we take a lot of sell side or a lot of buy side, we'll slow up, we'll chop around until price really makes a decision on where it wants to go. Which is why a lot of the time, if price does sweep your bias without giving you an entry where you want to see it go, just step away. And if you don't, you still are looking to take trades, definitely lower your risk. Because that's really one of the main things that I've been learning as well, is just understanding when to be risk on and when to be risk off. Because that's how you will make the most money. And right now I'm averaging like a 3.8 risk to reward, which is very good, on a very good win rate as well. Because I'm understanding what trades are less probable and what trades are more probable. Now, a lot of people say you just only should take the trades that are probable, which is also true. But for me, I do also like to backtest and learn and just get more data. And taking a trade with 2 micros isn't going to kill me, because I'm learning and I also have the opportunity to make money. That's how I see it. Not everybody sees it like that, but it's been working for me. And I'm on track to having my best month. Thanks to that and just my reflecting and me really understanding how I operate, because what works for me may not work for you. Everybody's brain is different. Everybody has different strategy. Everybody looks for different things. And so you have to really understand what works for you. Collect your data, journal, look at your metrics, because that's really what's going to show you the most. Like before I looked at my metrics, I didn't know that it was like 86% of my losses come from the first 10 minutes in open, which then causes me to get angry or try to revenge trade. Like all that stuff is linked in. Like, cause we're human. Like, at least I know for me, I'm a competitive individual. And so when it comes to trading, you have to kind of set that aside, because your competitive nature can potentially be your downfall. Like, I never liked to lose as a kid. I never wanted to lose. I wanted to win in everything I was doing. So when it comes to trading, it's kind of the opposite. You have to be a very good loser. You have to know how to lose. You have to embrace the losses, because if not, you're going to get angry, leading you to make bad decisions. Anger is going to cause your brain to kind of go into fight or flight when it comes to trading. You're going to want to over-risk. You're going to want to make the money back with the next trade. And you're going to want to just make bad decisions that you know you shouldn't make. And so all of that stems from just me understanding a simple statistic in my trading. And that's not the same for everyone, but that's just what works. That's just how I have been and what I learned. Excuse me. And just little things like that, just working on improving and not getting complacent. Because I'm still nowhere where I want to be at yet. Although this is probably the best span of trading that I've had my whole career over the past 2 years, this past month, but I'm still nowhere where I want to be at yet. And that just comes with not getting complacent. I think the most growth is going to come in this time right now for me. These next few weeks, these next few months are going to provide the most growth, because I'm just going to keep my foot on the pedal. I'm not going to get complacent. And that comes with me studying more, reading more, and just understanding myself. And I think that can also benefit anyone listening to this, anyone watching this as well. And yeah, I'm getting on here more. I'm gonna definitely get more consistent. I really just want to hone in and focus on this account, but I can definitely multitask. I'm gonna definitely get to uploading more. I know I say that a lot, but a lot for this time. So thank you for watching. Hope you learned something. Hope you enjoyed. And we'll catch you in the next one.